Given the market conditions going to next year, my favorite large cap is AT&T. I'm down on it personally. I know some of you are down on it as well because I have it in Curzio Research Advisory portfolio. But once they get that deal done, which I'm expecting a little bit early, it's definitely going to happen in 2022. They're going to split into two companies. And I went through the numbers and the data. And I understand that this deal is taking long. So the reason it's taking long is, again, it's a lot of markets and international and a lot of moving parts. And I get it. And that results in institutions being like, well, I'm bored. I don't really get in this. So, what's going to be the catalyst? And, they said they're going to lower the dividend a little bit, which they should, because I think it was like 7%. So it's going to be more like 3.5%, 4% for, I think, their wireless division. But when I look through the numbers and so the value that they're extracting by doing this is incredible. Half of this is going to be a pure play streaming company with Discovery, which is and will continue to be the second best behind Netflix by far. They're spending $30 billion plus a year on new content. The only one that could spend that much along with Netflix. Disney can't spend that much. They don't have it. They'll say they're going to spend that much, but they don't. And all the others, again, they don't have that kind of money or cash flow to spend on that. So you're going to get new content. That's the key to streaming, right? Is new content. It's not like existing content. It's because you're going to get sick of it and you're not going to pay for it, especially now everyone's going back to work and everything. When you're staying home every day to COVID, it's different, but it's all about new content. But you're looking at the new content that HBO has been producing is awesome, and they're going to merge with Discovery. So that's going to make them light years ahead of Disney. The other division is going to be a steady, massive income-generating wireless play. And that's going to have massive cash flows and a 3% plus dividend. Now, again, it's been slow developed, so I understand that the excitement has dropped off, so the company has fallen. Probably why it's not seeing those huge institutional inflows, but now that's starting to change. December, it just got 2 upgrades, and at these levels, given the market conditions of rising rates and inflation, and yes, you could say, well, AT&T has a lot of debt. They do, but they generate $25 billion plus in cash flow every year, free cash flow every year. And put that in perspective, it's almost, take out the $1 trillion companies, the technology companies, and these guys generate more cash flow than any other company in the world. That's how much money that is. Free cash flow, right? So easily paying off their debt, easily. But, you're going to see massive cash flow coming in from all these divisions. Again, I really like AT&T going into next year at this price. And again, with difficult market conditions, I think it's going to provide a safe haven. And I think it could easily return 30% next year and go up even a lot more the following year. Again, it's down like 15, 20%. It fell a little bit more, but you're seeing the upgrades come now and saying, okay, this is a joke where it's trading. And once you see this deal and how great it is, again, when I analyzed the numbers and really dug through it for a while, I was like, holy shit. It's just a lot of times my biggest mistake as analysis, I'm earlier than expected, which means I'm going to be wrong early on. But a lot of times that thesis plays out later on. This thesis, I think, is play out later on. They got all the tools in place. These guys are really killing it streaming. And, I think they have a ton of upside. The one I don't like is Ford. I don't think they're going to be able to deliver on all the promises when it comes to production. They're trading at a premium valuation. You guys did great in the stock. I went back and looked 2019, where I have a video to CES. Again, I'm going there next year, which is December 3rd, January 3rd, January 8th. So just 2 weeks away. And I went back and looked from 2019, last time they had it, which was live, right? Last year was virtual, which kind of sucked, but I was at the Ford booth going over the technology, even 18 and 17, telling you about the EV technology and the billions they're investing and the stock was in the single digits, right? I was talking about that. Look, the stock is up a lot. Good. Great, and you're looking at EVs and they're going all in at technology, to Rivian investment, but it's going to be difficult for them to sell their current fleet of non-EV cars because they're promoting their EV portfolio so aggressively. And now you have all these promises of production, which they're not going to be able to meet. They're not. They can't be. They even said it, right? They didn't say it publicly, but you could read it and say, we're going to only be able to offer like 10%. That's why they stopped taking orders. They're like, oh, demand's through the roof. It's not. Demand's strong, but it doesn't have to be too strong because if you're looking at taking percentages, 100% of the F-150 truck, right? It's the largest selling truck, whatever it is. Say if it's 10 million that they sell, they're only going to be able to sell 10% of that. So even if 20% of those F-150 say, I want an electric vehicle because I'm going to put a lot of miles on this thing, it's pretty cool, they're not going to be able to get it. So it's not like, oh my God, we're seeing massive demand. That demand is coming from existing demand for the F-150 truck, which, is going to slide over to EVs. Now, they don't have great technology. The F-150 Lightning is coming out after the Rivian, which is out now. You're going to see some deliveries, the Rivian R1T. Rivian's a much nicer truck. Just go to YouTube. It's amazing. It was just named 2022 Truck of the Year from Motor Trend. Rivian is a competitor of Ford. Ford was able to invest in Rivian. They should even took over Rivian. Again, they made a lot of money, and good for them. But they're competitors. And when I look at Ford being a super expensive stock, they're all saying the right things. I love their marketing now. They're very, very good at marketing, right? They're saying the right things. But, expectations are sky high, and they need to get everything right in EVs because, every single major auto manufacturer is doing the same exact thing. So you're looking at production, that timing is huge. Getting the materials to manufacture at scale for EVs, which they don't have yet, is huge. You better make sure you don't have any recalls on this vehicle. I mean, you're going to see massive competition out there, but we saw many companies saw streaming and said, oh, we're going to get to streaming. Look at Netflix. Yeah, it's fun. It's nice, but, you got to spend hundreds of billions of dollars over like a 5-year period to charge people $12 a month, $13 a month. And Disney's understand that they can't even get $5 a month, right? They're lowering, they're giving away for free now for a month or two, right? So they don't have pricing power with it because there's so much competition. And they're not coming out with their best free content because their best free content is Marvel, which they have to release in the movies because that's what generates the most revenue for them, billions of dollars every year. So that's not even going to be on their streaming platform until after most people have seen it. But you saw how many companies want to go and stream. It's been a disaster for almost every one of them. I mean, same thing here where it took many, many years for Tesla to be where they are today, including, being 1 month from going bankrupt in 2013, which Elon Musk admitted. But it's not easy to enter an insane capital-intense industry, which both of these are. I mean, it sounds exciting when you say, well, I'm going to become a streaming company, EV company, but, Netflix, AT&T spending $30 billion plus on new content where you have Disney, look at all this, Disney, Peacock, Paramount, Apple, Amazon Prime. Then you have, the live streamings, Fubo, Sling, YouTube, Hulu. Right, so which is stream sporting events, but outside of Netflix, Hulu is the second oldest streaming platform, and it lost not close, but 2017 it lost 1.8 billion. In 2018, it had combined losses. Right, this is like another 1.5 billion dollars, and that was combined for Comcast, Fox, AT&T, and Disney, who all owned it. Then Disney became pretty much, I think they're the sole owner, if not maybe Comcast. They bought from Comcast and AT&T, and they took over Fox Entertainment assets. So they almost own like all of Hulu if they don't own the whole thing. But I know it was like $7 billion combined for AT&T's and Comcast stake. But losses have been so bad that Disney had a partner with Star, a very popular brand in Southeast Asia, to launch Hulu internationally because it costs so much. So, you're looking at Hulu, and you could say Hulu's a success story next to Netflix. Let me tell you something about Hulu. Hulu has 40 million subscribers. Right, 40 million subscribers, generating $4.4 billion in revenue, and they're reporting a $500 million in loss this year. That's what they're expected to report. $500 million in losses, probably a little bit more. So you're looking at that's the most successful streaming platform next to Netflix. That's how hard this business is. They can't generate income. Same with EVs. I mean, it's really freaking exciting. Don't get me wrong. It's cool creating the new EV. It looks amazing. By the way, you should see all the EVs at the CES over the past 4 years. Wait till you see them this year. I'm going to be there again next week. Just go to TikTok. I'm going to be streaming live. Just all over our website. You're going to see everything. Really, really cool stuff. I go there and we have a media pass and I've access to so much stuff. Wait till you see the car, how beautiful they are. The only problem is they can't scale them. They can't scale these beautiful cars, right? But you have to see how amazing they look. Tesla cars are really ugly, in my opinion. They're kind of ugly. They're cool inside, but they're kind of ugly on the outside. These things are great. It's just you can't produce millions of them. But as you're producing this, what does this mean? I mean, how do you make 5 million of these cars? Where are the charging stations? By the time you release these vehicles, technology is going to be changing so fast. You have the latest, like batteries that go over 300 miles per charge. Because I can tell you, I'm not buying an EV that goes 250 miles per charge if one's out that has released that goes 400 miles on a charge, because that has that battery technology. That's important. It's a big difference. It takes a while to charge these vehicles. So it's a capital intense industry. Ford is super, super expensive at $19-20. They're not going to be able to live up to those expectations. I think that stock will fall next year. And we'll see. If people still get excited about, their truck and they're just not going to be able to meet production goals. I think they're going to fall short in a couple quarters of estimates, but we'll see. Maybe I'm wrong, but get to my point. I like AT&T. I think Ford's going to have another tough year. The stock may go up early on again on that marketing stuff, which is great with EVs. But once people realize that they're not going to get their EVs that they order until 2023, 2024, it's going to result in delayed purchases, which it's going to result in weaker sales in these years as customers are likely to wait it out until that new EV comes to market. Again, they're not going to get it for a couple of years. They're not going to get it next year, that's for sure.